Hello, you're welcome once again to the Wealthy Mind channel. I'm Abie Johnson. I'm happy to have you back on this channel. Now, this is a channel where we discuss all about business, helping you start up your business, and also give you basic tips on how to be profitable as a day trader. We're giving you several updates, how to kickstart your trading journey. And for those who are aspiring network marketers, you'll be receiving lots of tips on how to be successful growing your network marketing business. And we are back again to our beginner's guide on Forex. And for all of you, if you are just getting to see this video, we've already dropped some other videos on the beginner's course on starting your trading journey, so you can do well to watch our other videos on how to set up your brokerage account for you to kickstart your trading journey. Also, you can just do well to click on the subscribe button so you could subscribe to this channel. Trust me, you will get lots of value from this channel. A lot of stuff will be dropping out here on this channel that will help you create that extra source of income. Also, it's not enough to subscribe. You also want to click on the notification button so you'll be receiving regular updates on all of our videos. Videos on our business drops every Tuesday, and on Sundays we'll receive motivational tips to kickstart our week effectively. So that's it. You have it. There's a Wealthy Mind channel. Let's go straight away into our course for today. Still on the beginner's guide. For today, we'll be looking at a very integral aspect of trading, and that's the two sides of trading. Two sides of trading. For this video, we'll be focusing on just one. I want you to understand, as you get into trading, there are two sides. So basically, we have two different types of traders. Two different types of traders. We have the first is the technical side of trading. The technical side. Now, these where those who focus on this, we call them the technical traders, the technical analysts. This has to do with several technical analysis that has to do with your charts. So you see traders, whenever you see someone say is a trader, he always looks at his laptop and you'll see some very funny stuff. I could remember some years back when I got started in trading, the whole concept of the chart, when I look at it, it's just something, it could be confusing, you know, very confusing. I really didn't understand much about trading, especially if you are a novice completely. This is your first time starting out in trading. It could be very confusing. Trust me, I was there before, but we are going to do justice to this and just make it very friendly for you, so you would understand what it is to really look at the charts. How can you analyze the market? So that's the first aspect, and majority of traders fall into this category, the technical analyst. You look at the charts, and we also have another side to trading, and that's the fundamental. Actually, it's called fundamental because this is actually what controls the market. This is the main thing that controls the market. It's fundamental, and fundamental has to do with news. Daily, we have several news globally. Several countries release news. These news affects the market, either positively or negatively. Just as we know, right now, early parts of this year 2020, when we had the outbreak of the coronavirus, the COVID-19, the news of it alone affected the market globally. We had stock markets crashing down. We had several impacts just that news could do. Just like if you look at the chart, when you have the news of Donald Trump winning the elections, it impacted the US markets greatly. When we had the news of Brexit, you could look at the analysis and the chart, which we'll go into. You'll see the impact that news did to the market. So news is one thing that fundamentally affects the market. So for traders, even if you are a technical trader, a technical analyst, you really need to understand the fundamentals. You really need to understand what is going on globally. It would help you a great deal. So that's why everyone, whether you are primarily a fundamental trader or a technical trader, you still need to understand the news. And there is a platform I always recommend every trader to get familiar with, and that's the Forex Factory. You can go to www.forexfactory.com. You can see it there on the slide. Forex Factory, it's a platform that gives you daily news that is released that has the potential of impacting the market. Now, there are several other news globally, but Forex Factory just picks out most of the important news that could affect the market. I think subsequently we'll have a video that covers fundamental trading, how to really analyze the news and how to use the news to your advantage. But for today, mainly we want to look at the technical aspect of trading, how to really understand the charts. So understanding charts, and one platform we use very well in understanding the chart is TradingView. TradingView, it's a platform where we go and analyze the charts. You use the charts on the TradingView to analyze the markets, and then you go to your broker and take up the trades. Now, most brokers also have their own charts, which you can download and then look at how to analyze it. But TradingView is a generic platform, and I love it because it's like a standard platform you can always use. You analyze on TradingView, and then you could go irrespective of your broker. Your analysis in TradingView, most often than not, still stands. So we'll just go a little bit around TradingView and see how well you understand it. Now, one thing you must know is that the principle behind the technical analysis, the principle behind it is that history always repeats itself. The principle is that history always repeats itself. So that's the basic underlying principle of the technical analyst. So as a technical trader, you want to look at what has occurred previously, using it to predict what's going to happen in the nearest future. That's just the summary of all technical analysis. So let's go straight away to TradingView. So if you go to your browser and you enter tradingview.com, now this is how it looks. First thing you want to do is you want to create an account. So once you get to TradingView, what you want to do first is to create an account. So you could come here and click join for free. So once that is done, you insert your email and then your password. You come down here, you put in your username, your email, and your password before you sign in, or you sign up rather. So once you click on sign up, you'll be shown your account is not active yet. Now you need to go to your email. A verification has been sent to your mail. You click on that to activate your account. So once you've activated your account, you come back there and then you click on sign in. Now you could put in your username and password and then you log in. So once that is done, it takes you to this page. Now you see you can now go to charts. So once you go to charts, the chart opens up. Now this is basically what the chart looks like. But you can see they are this is Apple. The chart for Apple currently. Now I know this, especially for novice, just looks a little bit confusing. No kidding, I was there. Whenever I just open the system and I see all of this, I just wonder what exactly is this. Now just take it easy. We are going to go through this exactly. Now the chart basically looks like this, but we are not trading stocks right now. So if we come towards this panel of your charts, towards the right hand side of your chart, you'll see several assets that are being traded over here. You have the SPX, DXY, BTC USD, BTC USDT. Now all of these are assets that can be traded, but let's just delete all of them, because we are not looking at stocks right now. We're looking at currencies. So you see the X bar there, you can just delete, just keep deleting all of them. So we'll put in the assets that we want to analyze or we want to look at. So just follow carefully. Now let's begin with, at the top here you'll see a bar, you'll see add symbol. So you want to add the symbol you'll be looking out for. Mainly for all those who are just getting started, I always recommend you start out with the major currency pairs. The major currency pairs. And the major currency pairs, we have the US dollar, we have the euros, the European euros, we have the British pounds, we have the Japanese yen. Now these are the major currency pairs. Some persons would include the Australian dollar. I think the Australian dollar could be one of them, and then the New Zealand dollar. But basically the US dollar, the euros, the Japanese yen, and the British pounds. So these pairs, we could interchange them or trade them amongst themselves. For example, the US dollar trading against the Japanese yen, you have USD JPY. So we come here, you type USD JPY, and once that is done, you see all the USD JPY pairs. I always like using this one, forex.fxcm. FXCM is a broker, they are pretty good. They give you real spread. So forex.fxcm, you come here and you click on that. So there you go, USD JPY. Let's also add maybe 2 or 3 more. Let's look at the British pounds versus the US dollar. That's GBP USD. GBP USD. That's the British pounds against the dollar. We'll still go with forex. There we have it. Let's look at the euro versus the US dollar. That's euro USD, EUR for euro, USD for US dollar. So there we go, euro USD. So we have these 3 pairs right now. Let's just work with them. So if you click on any of them, the chart of that pair would appear on your screen. So basically, looking at the screen now, what are all of these things that we see here? Now these are candlesticks. We call them the Japanese candlestick. In my other video, I'll be doing a video explaining the Japanese candlesticks, how to work with the candlesticks, how to understand the candlesticks, how to use it to your advantage. But for today, I just want to explain how the TradingView platform is, how you could go around it. Now, this is the chart for the US dollar. Mainly, the green here shows you that the US dollar is appreciating, because this is the US dollar trading against the Japanese yen. So if the trade is going up, it means the US dollar is going up while the Japanese yen is going down. But if the trade is coming down, like in this point here, it means the US dollar is going down while the Japanese yen is appreciating. So here, what this tells you is that this is just a representation of the market. You have the market moving up, it moves sideways, it comes down a bit, it goes up, and all of that. Now, I said I'm going to go in details explaining how the candlesticks works. But just understand that these candlesticks represents a particular time frame. Now, there are different ways one could read up the charts. If you go down here, you could see the line chart. If you click the line chart, this just shows you the movement of the market basically. Now you could see that the market here, it moves up, it moves sideways, it comes down, goes up. This is how the price of the market has just been. And basically all commodities, all currencies, this is how the movement goes. More like a zigzag pattern. It goes up for some time, it goes down, it goes up for some time, it goes down, it moves sideways, and all of that. But why don't you see technical analysts always looking at the line chart? Now the line chart shows you the movement of the market, the direction, but we always recommend using the Japanese candlestick, because the Japanese candlestick does not only show you the movement or the direction of the market, but it also breaks down these movements in terms of time frame. Now, like looking at this, you could see that the market came down from this point here all the way here. But just using the line chart, you cannot explain for how long was this market going down. Looking at this, one can say, okay, the market was going down for 5 days. Someone can say the market was going down for 2 days or for 3 days, but you cannot really say for sure. Now, that's one thing that the candlestick has that you can't find in any other representation. So we always recommend the candlestick because it not only shows you the direction, it also shows you the timing. Now, so we go back to candlestick, we change this from line to candles. See the candles here. Now the candles, there is a box just before the candles. This here is the timing of the candles. Now over here it's at D, which is the daily chart. What this means is that each of these candles represents the daily price movement of the market. What that means is this candle here now represents 1 day's activity in the market. So it means the market moved upwards for that day. This day at the bottom, you could see this day here represents 8th of January 2020. Now the next candle also represents 1 day. This day here is 9th of January. This candle here represents another day. Each candle represents a day. So you could see this drop here represents how many days? Let's count this: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So for 12 days the market was going down. So basically this is the Japanese candlestick. It shows you the time frame of the movement, the time frame and the direction of the market. Now you could change the time frame, not only days, but we could go to 1 minute. You could see the time frame as low as a minute. So you see here, each of these candles represents 1 minute. So in 1 minute, like as we are speaking now, in 1 minute, this candle is moving up. By the end of a minute, another candle starts. Or we could look at the movement of the market in, say, 5 minutes. Within 5 minutes, what happens? Within 5 minutes, what happens? Now you see this candle here represents 5 minutes. In 5 minutes, the market moved from this point to this point. Or here you could see within 5 minutes, the market moved from this point to this point. Within 5 minutes, the market moved from here to here. Or you can look at it in terms of hours. In 1 hour, in 2 hours, in 3 hours, in 4 hours. So basically, that's that. Now that's for USD JPY. Same thing applies. You could look at GBP USD and you look at the market in terms of hours, in terms of minutes, in terms of days, in terms of weeks, or even in terms of years. So that's it. For technical analysts, we always focus on reading the charts. Now we'll be looking in details. How do you analyze the charts? How do you use this? How do you turn this to your advantage? How do you come and you look at the charts and make sense out of this? You look at the chart, you say, okay, the market has been coming down for this number of hours. What's going to be the indicator for you to tell you that the market will still continue downwards or the market is about to go upward? Because the whole idea of trading is understanding what direction does the market want to go into? So we'll be looking into all of those in our subsequent videos. But for now, there you have it. This is how the TradingView platform looks like. You could analyze your markets using the TradingView platform. You look at different assets. There are a whole lot of assets you could analyze this with. Even those who trade cryptocurrencies, you could analyze your cryptos here. I use the TradingView platform to analyze different cryptocurrencies, be it Bitcoin, Ethereum, all of the different cryptocurrencies. You can use the TradingView platform to analyze it, or even stocks or indices or index. You could use the TradingView platform to analyze all of that. So that's it for our video for today. So that's it for our video. Thank you once again, and remember, just subscribe to this channel because we'll be dropping lots and lots of videos giving you good content on how to analyze the market, how to start up your own business, how to grow your brand, how to get motivated and be the best you can.